We have William Rucker, who's the CEO of Lazard in the UK, joining us today. William, thank you for taking the time.
My pleasure.
And the Marvel deal speaks to two of the big trends in the M&A world this year, which is tech deals and activist investors. Your bank has advised on two of the big deals in Europe with Aveva Schneider, as well as the private equity take-private of PaySafe. What's driving tech M&A activity?
Well, I think tech is probably the single most busy sector for us right now. And we saw last year Arm and SoftBank as well. So it's been a big trend in Europe as it is in the States. But I think you're seeing the tech companies, all of them are making big strategic moves right now. And of course, many of them are incredibly well capitalized, both in equity terms and also just in the cash reserves they built up. So I think we're going to see more of it. And we built up our tech team in London over the last 5 years, specifically to address that, really.
So you're saying we're going to see it in both Europe as well as the US?
I think you'll continue to see it in Europe, and I think the US will continue to be one of the sort of big forces in the tech world, without any question.
And activist investors, you had this great study this year where you said they're allocating 20% of global capital to Europe compared to about 10% last year. I know you all have advised companies against the busiest activist, which is Elliott, in 2017.
Yes, we've been on the opposite side of Elliott many times over
yes.
the years. Yeah.
How are you seeing companies responding to this in Europe? It's relatively new, and do you see it continuing?
I think if you go back 3 years ago, the thought of activists in Europe having a go at things like Axel Nobel was almost unthinkable, in that people just didn't think that was going to happen, didn't think you could affect change. And I think the activists, as you say, have now doubled their firepower for Europe, and they really do believe they can bring change about. But I always think, when you think about activism, you should think about two things. One is they're stock pickers. So fundamentally, they're looking for value and how they can release it. And then secondly, their time horizon is typically less than the time horizon of the long-only institutions. So, you know, when you're on the opposite side of the table to them, you need to bear in mind those two things. So they're really looking to make something happen that means they can sell out quickly and make a profit. If that means the other institutions end up holding something that in the long term isn't going to be as valuable as it was before, then clearly that's the tension between the activists and the boards in Europe right now.
And the other thing, of course, is unsolicited deals. You were involved in the biggest one in the UK this year with Kraft Heinz's approach to Unilever.
And the shortest, probably. But,
yes. And, you know, we've seen it at about 500 billion globally, which is near record levels. Do you see that continuing, and what are the drivers there?
I think it comes and goes. I've been doing this 30 years now, which is a long time, and over that period you see times when you have big strategic moves with the counterparty not being willing to do it. And really those are the circumstances typically under which you get an unsolicited bid. I think most people, particularly in Europe, try and seek an agreed recommended deal. Now, the way you get there will vary. So, you know, we looked after ABI buying SAB, and clearly that was a sort of, you know, a fairly forceful, friendly approach. And so I think it all takes different variants. But in the main, people are looking for a board recommendation. It makes things, particularly at the big end of the market where there's regulatory clearances, it makes it much, much easier if you can achieve that recommendation.